This is In the Final Analysis.
Hello and welcome to an In the Final Analysis Minisode. I am the Media Support Manager, Kylie Yaki, and here is our Wisdom Financial Advisor, Joe Frederick. Hi.
Hello, how are you?
Good. I'm so glad to have you here.
No, well,
And
I'm excited to be here. I'm
yeah,
looking
and
forward to
Joe
this.
is going to be our regular Minisode host. How these are going to work is they're going to be a little shorter and quicker than our normal In the Final Analysis episodes. And we're going to be stepping back from the behavioral finance focus. And these will be a little bit more about Finance 101 and special topics, including like investing for Gen Z or estate plannings for boomers and everything in between. And so today's topic, we are going to touch a little bit on kind of what's going on in today's economy and some of the terms you might be hearing a lot through that, since there's a lot of economic policy and high level changes going on in the world right now that might be affecting your daily life. And a little behind the scenes knowledge, we are recording this on March 4th, 2025, which is the day that the Trump administration's tariffs on imported goods goes into effect. So Joe, our first question today is what are tariffs and who pays for them?
Oh, yeah, there's there's a lot of emotion going on out there about tariffs. But
Yes.
basically, what a tariff is a tax imposed by a government um, on imported goods. So obviously, we've seen a lot in the news about Mexico and Canada tariffs being increased on them. So basically, what that is their goods coming into the United States are taxed at a higher rate. So if it's a 10% tariff, it's going to 20% or 25%. That means Canada has to pay more to bring their goods into the United States, which obviously, in result, causes prices for consumers in the United States to be higher. The original idea behind tariffs was to, help increase your domestic industries. So a tariff was imposed on goods coming in, and obviously those prices are a little higher, where hopefully your domestic industries were less expensive because they don't have the tariffs on them because everything is made here, so on, that it would, make your consumers here in the US be more compelling to buy US domestic products to help, obviously, your own economy. But obviously, the US is not able to produce everything or any country. So, everybody has imports, exports, but that's, basically why they were put into place. I don't know if necessarily they're used in that manner today with what's going on, but that's the idea behind tariffs, is to make sure your domestic industries can prosper. They look more enticing. We see a lot of things. And my background before I came on with Wisdom, for 25 years I was in the golf business. So you see a lot, everything on a golf club, golf bag, whatever. There's a sticker on there somewhere that says assembled in the US, which, yeah, it was assembled here to try to make you think you're buying American. Every part manufacturer was made overseas somewhere. Yeah, it was put together here. But again, so those things are being imported in here into the US, which has tariffs on them, which again, drives up the pricing.
Gotcha. Thank you. And speaking of prices going up, can you please explain what exactly is inflation and what causes it?
There can be a lot of factors that cause inflation, but the main thing, with inflation is pricing increasing, across the economy. That has to do a lot with supply and demand. So if a demand for a particular product is continues to increase, and the supply goes down, obviously there's a demand for that. It gets into bidding wars, where prices will go up because there's not enough supply to take care of the demand of people wanting that product. So that causes a lot of that. there's a lot of talk with the Federal Reserve and how they control inflation with interest rates, or whether they put money into the economy by, with bonds, buying from the Treasury, or, they'll buy bonds from the Treasury, or they'll force the Treasury or banks to buy bonds from the Federal Reserve to increase or decrease the money flow, which can help in inflation. We've seen a lot of this in recent years. As far as a few years back, we had the issue with the ports and supply chain issues, and some of that obviously had to do with COVID-19 at that time. There wasn't as many workers out there. There wasn't as much labor. And there was some, possibilities of union strikes in the ports that all had an effect on that. There was, all the ships are out there in the bays and they're wanting to get into port, but obviously there's nobody to unload them. So, and then, you had that, what I said earlier about the supply and demand. Your demand is going up, but you don't have the supplies coming in to increase that. So that causes a lot of inflation, along those lines. So there's a lot of things, that really affect it. Unemployment is another idea, that can affect it. It seems kind of weird, but for inflation with unemployment in relation to that, you tend to want to have a little slack in the economy, which means you kind of want unemployment a little higher. And that sounds kind of bad. It doesn't sound good, but unemployment, if it's low, that means there's a lot of people in the workforce. Most everybody's working. And so when a lot of people are working, that increases production. That can help increase wages, because as there's more demand for more product, people are wanting more money to make those products along those lines. So again, there's more people working, there's more money in their pockets. They're obviously wanting to spend it, and that can cause supply to go down, because there's not going to be as much supply. People have more money, the supply goes down. There's more demand for that product, but it's not out there. So, and that, unemployment is not a huge thing that causes inflation, but it can help in the process, with inflation. The Federal Reserve shoots for 2% increase in inflation every year is what they're looking for. And that's kind of the standard of, the benchmark of what they want to hit. And obviously it's been a lot higher here of lately because of supply and demand. But that's kind of basically what it does. And obviously, when inflation's high, it hits purchasing power. There's a purchasing power risk with high inflation, because obviously your money doesn't go as far.
Right.
You can't buy as many things. So there's a lot of effects out there with inflation, and it's a hot topic right now with everybody.
Indeed.
But it hurts, and there's a lot of things, like I said, that go into it. But it definitely hurts people with what's going on. Tariffs are a thing, we talked about earlier, that can cause some inflation. Obviously, everything coming into the countries it's a lot higher priced. So if it's higher priced, people can't afford it, then all of a sudden there's less demand for that product. So again, back to that supply and demand, there's, that'll cause inflation as well.
Gotcha. Thank you. Speaking of purchasing power, how strong is the US dollar right now, and how is something like that determined?
Well, yeah, as of right now, the US dollar is really, really strong. It increased by 7%. It rose 7% in 2024.
Oh, goodness.
Yeah. Yeah. And they say, some of the comments out there on that are, it almost defies gravity. That it's increased that much in 2024. They hope, it tends to level out in 2025, but the start of the year, it's kind of still very strong, with that. So it's, but it's determined by its relative index compared to other currencies. with the US dollar. So it could be the yen or, the euro, all the different currencies around the world, is what it's compared to. And there's several things that, affect how the dollar is rated, I guess, compared to other, so a lot of it's economic growth. So how your industries are driven with productivity, in your domestic world, monetary policy, which again gets back to the Fed, how they control it, and then government policy. And again, it seems like it's a huge circle, but when you talk about monetary policy, or policy changes, I'm sorry, as far as the administration is concerned, is policy changes. And, again, what are we changing right now? We're looking at tariffs. They're trying to control, what comes into the country, what leaves the country, how much it costs to bring those things in and out. So the three big effects of the US dollar, is again, economic growth, monetary policy, and then policy changes, which has to do with your administration. And our administration seems pretty bold right now with what they're trying to do. Neither good or bad. Who knows at this point? It's is it going to affect us immediately? No, not right away, but certainly in the future, going later in 2025, maybe, I don't know, third, fourth quarter, you're going to see some pretty big effects if these tariffs stay in place. And that's, again, will affect, how the US dollar is rated around the world.
Understood. Yeah, that makes sense. As part of the uncertainty, both right now and in the future, as things come to pass, something that comes up a lot with our audiences as a topic of interest is Social Security. Could you quickly tell us, what is Social Security, and is it safe right now?
Yeah. Well, Social Security has been around for a long time. So just a little history. Social Security started August 14th, 1935, is when FDR put it into place.
Oh, wow.
And it was obviously meant for people who were working, and it's certainly evolved a ton. I mean, when it was originally set, obviously people that worked and paid taxes, the first taxes were taken out in January of 1937. The first benefit was paid out in 1940. So,
Wow.
but it was set up to help, your workers who had worked their life. They paid their taxes. You paid in your Social Security. When you retired, you got a benefit or a pension per se from the U.S. government for your work. When it was originally set up, but it was set up to just go to that individual that worked. So if someone passed away early, or they passed while they were getting their benefit, that benefit didn't go to the wife or children, and at that time, wives didn't work, it was, so it put a lot of people in strain. So, Social Security has evolved. Obviously, if it's some things like that happen now, it goes to the family or to the wife, or, so it has certainly evolved. But we've been talking about Social Security for a long time, about whether it's going to stay around, be around, and it's continued to survive. And I don't think Social Security is going to go away. It's going to continue to survive. My concern with Social Security is kind of what's going on now. And we see a lot of government layoffs and things like that going on. My concern with closing these buildings and not having employees, a lot of people are going to be affected, and that's concerning, because they don't have anywhere to go to ask questions. If a lot of these Social Security buildings are closed, there's nobody there. People being on the phone trying to figure out if there's a problem with their check, or just to ask basic questions. The support is not going to be there, to me, looking in the near future, and that's an issue. You talk about people that with disability benefits. that are paid through Social Security. And a lot of them can't drive. They may be in wheelchairs or on crutches, or, people with prosthetics and things like, they have a hard time getting places. So not having something local, is a problem. I don't think from the standpoint of paying out Social Security, people are still going to continue to get paid. I don't think they're going to let it go away in that aspect, because obviously all the baby boomers are retiring. There's more people going to be getting Social Security than what's in there. They've always made it work, and I believe they still will. But that the one fear with me is people being able to communicate, get to where they need to get to ask questions, not having people there to support them. The Social Security Fairness Act just was signed on January 5th, before the new administration came in. That took away it lowered some benefits for some people, because they added some benefits for people that didn't necessarily that were covered by Social Security previously, are now covered. So there's a whole lot of going on with Social Security right now, and there's a lot of questions around that. I don't think it's going away. I think it's going to continue. People are still going to get their benefits. It's going to be tougher. Let's just say that to get benefits, I think, or to be able to communicate and get answers.
Right.
And that's a scary thing for a lot of people that we have here. Because there's a lot of people, a lot of elderly people that are getting benefits right now that are obviously not in the tech world. Everything is going AI. They can't get on a computer. They can't do those type of things, and so they relied on being able to get to a local Social Security office, or being able to call a local Social Security office and get some answers and to be able to talk. And so that's my concern. It's going to get paid, but there's a lot of issues with Social Security.
We always are disappointed to see a human element start to be retired at the care of
100%,
people.
Yeah. It's tough, and for us, for Jim and I here, we take so much pride in our clients and getting to know our clients and being there for our clients and helping them. And I think that's really what sets us apart. Is we understand our people and our clients and what's going on, and we do everything to help them. As Jim always says, we're 24/7, and he literally, we are 24/7. It is, but it is concerning, for us with some of our retired clients, because obviously that's one of the things in investing that we look at as far as doing our proposals and making sure that our clients are in good shape for retirement, is seeing where they're at with Social Security, what they're going to get, putting that into their plan and everything. So it is important. So it can be stressful for us as well, because we might not be able to get those full answers sometimes.
Yeah, understandable. And hopefully, for as much as we can, we are here to help everyone.
100%. Yeah.
Give us a call if you have questions, and we can always see what we can do. And so for our final question, we're going to pivot just a little bit, because you mentioned investing. What is the deal with this new market algorithm that everyone's a buzz about?
So that obviously with the big influx of AI, these new algorithms and things like that, it's basically all kind of computer based, basically, with the AI. So with AI, they're able to maybe track stocks or investments or things like that a little faster than what, say, you and I could research it. And so they're able to do that. So they're saying, with that, they're able to track stocks or different investments, whether they're mutual funds or ETFs or anything like that, to be able to give you information to buy and sell quicker. They track tendencies per se of stock, of whether it's at a buy point or sell point. So that's basically kind of what it surrounds. Is the new algorithm is had to do with AI to be able to track things a lot quicker, for people to grab that information, hopefully to get maybe to get into the market a little quicker, or they're going to see a downturn down the future. They're able to predict that a lot quicker. So maybe people like Jim and I can move our clients properly before that hits, to be able to follow it. So it's basically surrounded around AI and the efficiency of how you basically invest. So
Awesome. Thank you so much for all of your explanations today. This was so helpful and enlightening. And I can't wait to talk with you more in future Minisodes about all sorts of niche topics. And next time, we're going to dive a little bit more into your and Jim's roles here at Wisdom Financial and how working with a financial advisor kind of works.
yeah,
Yeah, so
looking
I'm so
forward to that.
excited.
Yeah, that'll be good. We're excited.
Yeah. And if you'd like to get started on your own financial intelligence journey with us, we have so many resources at www.wisdomchoice.net, including full episodes of In the Final Analysis with our manager, Jim Yaki. And we're going to be talking about all sorts of things, behavioral finance, finance 101, and more on our website. So thank you all so much for listening. And you can subscribe to more episodes, both full and mini, by signing up for our newsletter on our website, and as well as subscribing to In the Final Analysis, wherever you listen to podcasts. All right. And so thank you all, and see you next time.
Thanks, Kylie.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professionals before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer, member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Wisdom Financial Management, LLC are not affiliated.